Welcome back. So here are the 4 rules you need to know before entering a trade. So the first rule is that you need to identify the higher time frame market structure. You need to identify the higher time frame market structure. So here now I'm on this pair AUD/USD. I'm on AUD/USD right now, and you can clearly see that this is the daily time frame, and the trend is bearish. Why? We're making new lows, lower lows, lower lows, and lower highs. We're making lower lows, lower highs. See, you can see this lower low, lower high, grab liquidity, break structure here again, same thing. So we're breaking structure to the downside, meaning that overall trend is bearish, and the dollar is much stronger than Aussie. So to identify your higher time frame market structure, you can come over to the daily or the H4 time frame, depending on what you use. If you're a swing trader, you use the daily. If you're a scalper, you should start from the H4. The daily is too far for you to determine your trades. So let's say we are the daily here. So what you want to be looking for is 2 break of structures to identify your trend. You need 2 break of structure to confirm the trend, to confirm the market structure. So here we have one. Here's one break of structure here on the daily time frame, and here's second break of structure here. These are the 2 most recent break of structures. So let's just do a quick breakdown. So this is a high, this low, this is lower high, lower low. Simple. This is a low, this is a high. Why is this a lower high? Because it's fit to take out this high, so it's a lower high. All right, with that being said, so we can also go to the H4 time frame, identify structure too. So let me get rid of this. You can go over to the H4 time frame and identify structure. So as you can see, we are making new lows here. You can see the market push up, broke structure here, broke this structure, retraced, came back down, just like that. You see the bearishness, then we switched bullish, and now we are bearish back. Alright, let me do a quick explanation for market structure. So on a downtrend, to identify you are in a downtrend, you need market to be making new lows and lower highs. So this is it. Market is moving like this for it to be in a downtrend. So this is the this is a high, this is a low, this is a high, and this is a low. This is a lower high, lower low, lower high, lower low. So our expectancy is for the market to continue making lower highs and lower lows until it breaks one of the high. So this is what we're expecting the market to do. As a trader, we don't predict, we react. So in a bullish trend, you want to be making higher highs like this, with the other higher low breaking the prior higher high. So you can see high, low, higher high, higher low, higher high, higher low, higher high, higher low. Why is this a higher low? Because it took out this other high here. I made a new high. Right. So that's rule number 1. Identify higher time frame structure here. So if we come into the chart now and quickly identify the structure on this H4 time frame here, you can see how price made a new high here, broke structure, broke this structure, lower high, broke structure, lower high, broke structure. As you can see, I made some trade breakdowns with this space. I've took some trades around this period on my channel, so you can check them out. Make sure you subscribe to the channel. Alright, so you can see for bullish also, I see made a new high, came back down, mitigated it, broke structure, came back down. So good. So you identify what's market structure. That's one. Then now let's go over to the second rule. So the other rule is what? Identify the higher time frame zone. So now after we've identified structure, or let's go over to the daily. So we have a break of structure here. So this is my this is my drop, base, drop here. So this whole zone is my what? My supply zone. This is my supply zone. So this is my supply zone now. So this is for zones. So let's identify other zones. So this is what? This is a rally, a base, and a drop. This is what? Another supply zone. So in a downtrend, you want to be looking for supply zone, and in an uptrend, you want to be looking for demand zones. You don't want to be using this zone to trade to catch this small move that will later take you out and know what break structure. You want to be looking for trades you can hold to make a new low. So you can see zones, supply zones, supply zones, supply zones, supply zones, supply zones. This was also a supply zone here. You could have caught a trade from. Alright. So that's how you identify your zones. You know, we have different type of zones. We have what? We have the drop, base, drop. We have that's for supply zones. We have the rally, base, drop. This for supply. Then for demand zones, we have the what? Drop, base, rally, and we have the what? Rally, base, rally. I made a full breakdown video on supply and demand, so check it out on my channel. It has everything you need to know about supply and demand trading. Alright, so the next rule is what? Identify your order block or refined zone or your point of interest. So on this big daily zone, I'll go to my H4. I identify my order block. My order block here. What's order block? Order block is the last buy candle before a strong down move, or the last sell candle before a strong up move. So here we are in downtrend, so we're looking for the last up buy candle before a strong down move. So in this current situation in the market now, you can see it's real-time markets here. You can see that after this break of structure here, from this drop, base drop, you can see that the last buy candle that institutions traded out from is this one. You can take it from week to week. You can use the body, whatever suits your plan. But if the candle is small, if the body of the candle is small, use from week to week. If the body is huge and massive like this, use the body. This is very huge. So this one that you can do is the body is very small. I use the wicks. Alright. So that's for order block. Let's say for minute structure, that's for this structure here that you see. You made a new high, low on this on the H4. You can identify our order blocks too here. After this break of structure here, after price broke this internal structure, this was the last up candle before the down move. You can see clearly this was the last up candle before this sharp down move here, and price came to it multiple times and respected it. So we get another break of structure here, and this was the last up candle. Eventually price came to it later on. Price did come to it. Yes, as you can see. Yeah, and can give you some trade, but if you have enough time to pay your stop loss at break even, or take it off. You can also see here how price broke structure here. So you can see this is how you identify your zones. You can see this body is very big. You pick from body to body here for your order block. After breaking structure again, your zone. So you can see how you could have cut all these trades, 1, 2, 3, all these trades here, by understanding how to refine your zone, your supply zones, your supply and demand zones. Alright, so going over to demand now, you can see this is corrective because we're in a downtrend. This is the down impulse, this is the impulse. You can see the sharp movements down. You can see the sharp movements. You can see the sharp movement down and the corrective movements up. Sharp movement down, corrective movement up, sharp movement down, corrective movement up. Alright, so now here price is correcting slowly upward, and you see the sharp movement again because the overall trend is what? It's in a downtrend. All right, that's why you need to identify market structure first before anything. Is very, very important in your trading. So for the buys, you can see after this break of structure here is internal structure. Take this last sell candle. It's very, very big candle. You can see it. They give us another break of structure here. Then this last candle. Then after that you go to another break of structure here. So this was the last candle that did that. Obviously price wicked it, grab liquidity from it. It grab liquidity, yeah, before breaking structure. All right, that's that with identifying refined zones. So it can help you catch a very, very, very beautiful risk to reward trades if you understand it with market structure properly. So make sure you subscribe to this channel. I'll be revealing many of the secrets for you all for free. Good. So after identifying your order block or reference zone, the next thing you need to do is what? You need to wait for price to come into your zone, and you need to wait for confirmations in your zone. Wait for price to come into your zone and wait for confirmations in your zone. So now, what confirmations? You could use Wyckoff distribution here. You could use engulfing candles, that's price action trading. You could use change of character. I use change of character and Wyckoff. So any of those work for you. You could use market structure analysis. Just wait for what price to come into your zone and wait for confirmation, because if you are entering off the zone, like this zone now, if I short off this zone, this is another block that has not been mitigated. If I short off this zone now, of course it gave me a reaction, but it failed to take out the next low and it stopped me out because I did not want to wait for confirmation at my zone. Because I did not wait for confirmation on my zone. Let's go with this. All right, so let's just see the zone at real market price. Now I actually took a trade here. And I've closed the trade already. I'll be making the trade breakdown on another video, maybe on the next video. So before this one, I'm explaining the 3 rules you need to understand before entering a trade. So now you need to wait for confirmations in your zone. So let's just drop over to the 15-minute and see. So you can clearly see here there was some Wyckoff distribution here that happened, and it led to a what? It led to a break of structure here, and price eventually came back for the last test of what? Supply here, and dropped massively. Price dropped to come and clear all these lows here. All right, I did not hold the trade up to this because I closed my trade at this point. 90% of my trade, I was okay with the risk to reward. This was enough for me. All right, so coming to this minute structure now. You can see after this sharp move of price, you can see this small pullback and this move. So this is what? Drop, base drop. So this is what? Supply zone. Now you can wait for price to what? Come into it, then wait for confirmation. Either I use change of character or what? Wyckoff. So what's change of character? When price is moving an uptrend, breaking structures to the upside, and it breaks one of the low. So this is a change of character here. So you expect price to come back up, trade into what is zone around here, then continue moving down. That's what you expect price to do. So this is a change of character. This is for what? Supply zones. Then a bullish change of character is when price is making new lows here, and we take out one of the high. We're expecting price to come back here and what? Continue making new highs. So it's a change of character. Here price was going up and it changed character. It was going up and it change character and started modes moving down. All right, so that being said, quick recap: the rules we need for entering a trade. The first rule is what? Identify the higher time frame structure, which is what? Your highs and your lows. Second one is identify the higher time frame zone, your supply and demand zones, rally base rally, drop base drop, and all of that. Check out my videos. I'll put a card now so you can click on it if you don't understand the video, if you don't understand what I mean by higher time frame zone. So identify order block or reference zones, order block, last buy or sell candles before they move, then wait for what price to come and confirmation. So with this being said, you should be able to what? Trade smart money concept with ease, with the right risk management and the right psychology. So make sure you subscribe to my channel for more of these videos, because I'm going to be releasing them back to back now. And with that being said, see you in the next one.